Simplicity is the outcome of technical subtlety. It is the goal, not the starting point. Maurice Saatchi. And Maurice again hit the nail on the head. The goal is simplicity. That is why our charts are so simple and yet so accurate time after time after time. We didn't just come up with this overnight. It has been honed down over many, many years, including the creation of the weekly vertical crossover using the price percent oscillator and, of course, the derivative oscillator. All that we teach here on a daily basis has been formed with lots of experience over time, watching these markets, watching these charts, and doing what we do on a daily basis. If you want to get good at this, I got a message over the weekend from someone wanting to know if we just published when they could buy and when they could sell because they didn't have the time to be involved in the markets. Now, folks, what do you think my answer was to that? No, we're not a stock calling service. We're an education firm, and you alone are the person who makes your own decisions of what to do with your own money. That is why you have to devote the time and become expert at this. We are happy to work with you every day charting these markets so you can practice until you get this down. And it takes months, years of honing and practice in order to do this. And again, 10 to 15 minutes a day is all we ask. But don't write me and ask me if I'll give you the buy-in points on what. No, I won't. That's not going to happen. You're going to have to be able to do the work yourself, plan the work the plan, read the charts. And again, it's all set up around the time you have, the parameters you have, how much you want to learn. If you're not willing to invest that 10 to 15 minutes a day for however long it takes, then I'm just entertainment. I just might make you feel good, and every now and then you get a tip and it works great. That's not what this is about, not what it's about at all. And I appreciate all of you who are hardcore, who listen every day, who practice trade all the time, who fill out your daily market worksheets, your weekly market worksheets, you buy the book, you participate. You are the people I do this for, not someone who's never listened and then sends me a message like that. Let's jump into these charts. We see that things are up for the day when it comes to stock. Bonds are down. Gold is up just a little bit. Now, let's jump in and see what we see. Bingo! Look at what we have forming at the beginning of the week. We have a down candle. We do notice, however, that the wick on the bottom is not the same length as the 2 weeks prior wicks. Hopefully, for continued strong down movement, that's going to lengthen as the week moves along. The good news is we do have a red down candle at this point, even though the S&P 500 was up 1.11%. Price percent oscillator still headed down. Derivative oscillator gaining downward momentum. Go to the 2-day chart. We see that it is still headed down, again drawing down that prior 2-day candle representing Thursday and Friday of last week is a red spinning top with a long wick on the bottom and the top. That shows the indecision where price moved all over the place, both up and down. So far, first day of this latest 2-day candle down, but still that wick not approaching those prior low wicks. We hope to see that continuing to move down. Consequently, we see the price percent oscillator not heading down at the same strong angle it had been. Derivative oscillator continuing to lose downward momentum. We look at the 4-hour chart. That's where we see the stall up in the morning and then not so up in the afternoon, pulling back a little bit. Derivative oscillator still heading down. Price percent oscillator is about flat. So again, as we get into the week, we'll see if that surge of down movement is going to continue. Where is the pressure? Well, of course, the pressure, based on the weekly chart, is down. Based on the 2-day chart, is down. And of course, the 4-hour chart is still crossed over, going down. So keep your eye on things. Let's see how things move for us. So that is where we are on the S&P 500. We're going to go to the Qs. And what do we see developing there? Again, another down candle. Wick not as low as the prior 2, 3 wicks. Price percent oscillator still heading down. Derivative oscillator still gaining downward momentum. So the big The big wave is down. Also the intermediate wave, it's down also, again, similar to the S&P 500. The wick is not as low as the prior wick on that 2-day chart representing Thursday and Friday of last week. The current candle will finish drawing on Tuesday. Derivative oscillator losing downward momentum. Price percent oscillator still heading down, but not as strong an angle as it had been. And of course, we see even less decision toward the end of the day. A doji means indecision tending up. Price percent oscillators not quite flat. Derivative oscillator still heading down. So again, the weight on the market is still down. We shall continue to watch, wait and see how things continue to move for the week. But the overall mood down on stocks. Go to 20-year bonds. Where are they? Pulled back a little bit for the day, down 0.40%. But again, starting off with a green up candle. The top for the day, 146.29. The prior week, 146.27. So boom, hit a little bit higher. Well, that's nice to see. During the course of the day, price percent oscillator still heading up. Derivative oscillator gaining upward momentum. So bonds are still in an up mood. And of course, we see that the 2-day, even though bonds were down just a little less than 0.5%, we see that we have a green open box candle. And again, hasn't recovered from where bonds peaked back on Thursday, the 15th of August. That represented Wednesday, the 14th, and Thursday, the 15th. We see the price percent oscillator pretty much flat. Derivative oscillator losing momentum. And then we look at the, not the 2-hour, but the 4-hour chart. And we can see things up in the morning, pulling back a little bit in the afternoon. Price percent oscillator still negative on that 4-hour chart. Derivative oscillator continuing to lose downward momentum. So we'll watch and see what there is to see. Are bonds going to reverse back around and really start pounding upward? We shall see. Again, down just a little bit for the day, but the overall pressure is still quite persistently up on bonds. Now we go to gold. Gold was up for the day. And again, nice candle forming, higher high on this candle. First day of the 5-day candle. Price percent oscillator heading up. Derivative oscillator losing just a smidgen of its power going up. We go to the 2-day chart and we can see where things peaked a little higher than they did previously. The high 144.97. Wow, pushing right at that 145 mark. Yes, substantially higher than where it was on the last big green candle back on Thursday, the 15th. And of course, this last candle for Thursday and Friday, 144.33. So yes, we did hit higher highs. Price percent oscillators heading up almost flat. Derivative oscillator losing momentum. Price is well above the 2-day. And you notice this is the only real 2-day trend line we have. The others just really aren't functioning trend lines at this point on the other charts. But the 2-day and the weekly price well above both of them. That's nice for gold. Go to the 4-hour chart. Saw gold pop up in the morning and then lose some steam in the afternoon, but did have that crossover on the 4-hour chart. So again, keep looking for a potential decent entry point on gold. It did cross over in the morning. Perhaps you jumped in the afternoon. If our Heikin-Ashi candlestick has given us some idea, you might have jumped in at 143.81. If that indeed was your jumping in point and it closed at 144.19, that's about 20 cents up. That's not bad for starting off, but again, keep your eye on things. If you hadn't jumped in, try to find a jumping in point if things continue up tomorrow. We'll just continue to watch these charts and see how everything sorts out in the crazy world that we live in. Folks, worked on the finishing touches for introducing you to our 3-month intensive training course we're going to be putting out here in September is the plan. Everything is coming together. I have the initial options course, just a free course that we're going to be handing out to everyone on Options Made Simple, the Charting Wealth Way. That is in the can and ready to launch, and we're going to get that out to you sometime this week. And again, Just stay tuned. That stuff is going to go out, of course, to everyone who is a subscriber. How do you become a subscriber? You go to chartingwealth.com, put in your name, email, address. You'll get our daily market reviews, our once a week comprehensive review and forecast, and all of our trainings like our option training that's going to be coming out soon, but you got to subscribe. That's absolutely free. If you hadn't purchased our book, that does cost a little bit. It's a way for you to support us here at the channel. It's a way to quickly understand what it is we do here and why. I cut out all the surplusage in that book, honed it down to what you need to know. I could have stuffed it for 500 pages of a lot of gobbledygook that you don't need to know. It is the down and dirty secrets of what we do here at chartingwealth.com to help you understand why we do it, how we do it, and why it works. And if you don't have the book, we have an autographed copy waiting for you. Follow the link in the show notes. You happen to live overseas, for some reason Square Up won't allow us to clear foreign credit cards. Have no idea why. We're working on that. But in the meantime, email us. As always, the email address cw@chartingwealth.com. Email us. Tell us you want to buy our book wherever you are in the world. We will send you a PayPal invoice. Pay that. We'll send your book to you. We've sent out, I can't even tell you how many, all over the world. So thank you so much for being with us, my friends. You can always write us cw@chartingwealth.com. Patreon members, we did a special recording for you at the end of the week. You should have gotten it over the weekend. If for some reason you did not, including our new members, many of those over the weekend, appreciate that. If you hadn't gotten that special training that we did for you, then maybe your stuff's going to the wrong address, or maybe it's in your spam filter. Whatever, let us know. We'll get it out to you. Again, God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.